Hi, I'm Pat Sweeny, and welcome to the third and final set of helpful tips for investors. Today, we'll take a look at the benefits of being informed about your portfolio, the importance of understanding your personal behavioral tendencies, as well as the relationship between risk and return. Tip number 8. It is your responsibility to know how your assets are invested and the underlying investment philosophy. Really, a great example of this is the Bernard Madoff scandal from 2008, 2009. So many of the people who invested with Mr. Madoff did so solely based on his claim of returns in all kinds of markets. And they didn't really dig deep. They took his word for it because they felt they had access to something no one else had access to. At the end of the day, a little known fact is none of the major banks on Wall Street lost any money to Mr. Madoff because he wouldn't share his investment strategy in depth with anybody. Well, as we know now, there was no investment strategy. So at least a high level, you should be comfortable with the way your money's invested. You shouldn't just trust someone blindly. Tip number 9. Financial planning and investor behavior are more important to long-term success than the investments themselves. This is sometimes foreign to investors. They think that how they're going to invest their money is going to create tremendous wealth in the future if they do it right. And the fact of the matter is, first and foremost, how aggressively you save is going to be the number one indicator of how much wealth you have in the future. And secondly, how you behave over the course of the investment, meaning when times are volatile, do you sell? And when markets are low, do you keep your money out? As opposed to buying low and selling high, which is putting your money into the market when times are bad. And then financial planning, are you taking advantage of all the laws out there and all the rules out there so that you get to keep most of your money? The old adage really does apply. It's not what you earn, it's what you keep. So are you investing in a tax-advantaged manner? Are you taking advantage of all the savings vehicles available to you? This is far more important than the actual investments. But I would say most importantly is how you behave, especially in times of volatility. Many investors take their money out when their investments are doing poorly and then chase investments that have done well lately. And that's actually the definition of selling low and buying high. And you'll never get the return of the markets. There are studies your advisor can show you from places like the Dow Bar Company in Boston or JP Morgan that show investors on average underperform the market itself over time because of this behavior. Remember, when markets are down, things are on sale. And when markets are doing well, it may be time to rebalance, but it's never time to chase the best performing investment. Finally, our 10th and final word of advice: risk and return are related. There's no free lunch. If you remember one thing about investing, remember this: risk and return are related. If you have an investment strategy and someone is asking you how you've done lately, and in this particular time period, perhaps you've done 3, 4, 5%, you'll always find somebody out there who says, I can do better for you. Remember, risk and return are related. There's always an investment out there that's done really well lately. What you have to appreciate is how much risk was taken in order to get that return, and is it the right investment for you? Risk and return are related. There's no free lunch. Take that to the bank if you take anything to the bank. I hope you find these tips helpful in the future, but if nothing else, please bear this in mind. There's no magical solution when it comes to investing. In truth, we believe it takes a patient and principled approach to endure the market's day-to-day fluctuations. To be successful, we encourage you to set aside your anxiety about volatility and stay focused on the road ahead. Thank you very much for your time.